One of the things we notice in the stock indexes is reversals and the divergences related to those reversals. And so what is a divergence? I want to go over that real quick and show you what a divergence is. Here is the advanced decline line. And here's a pattern that I find difficult to figure out how to trade. It's a gap continuation and then reversal. This reversal can take place anywhere from the first hour through the last hour. The depth of it can happen at any time. So you would have to loosely parameterize any sort of effort to capture the reversal. But you see the trend line forming, and at some point the trend line will either break down further or reverse. And so trying to pick that turning point can be tricky. But one of the things you can notice here is a divergence between the advanced decline line, $ADD, and you see that the market makes a low here at 11 a.m. The advanced decline line makes its low of the day right here. You see this little V bottom in the advanced decline line, little V bottom in the market, but the market rolls over again. The market makes another low right here, but the advanced decline this time did not follow through. It did not follow through on that low, so that's a divergence. And so then you see this spike up, and you see our volume sum day indicator keeping track of the volume on the day. This is the entire day. This is a dynamic indicator at the bottom. You see a surge in blue here at this price. And so typically you can buy a low, a new low maybe. There's times when you can do that, or you can wait for a surge and then try to capture the continuation. And so one way to capture that surge is from this volume sum day indicator surges higher after you see a divergence in the advanced decline line. And so just look at the volume sum day indicator. Here is a strategy that I put together that I had forgotten about. I put it together in July of last year. I haven't looked at it since. It's based on the volume sum day and tick count trend indicators. And let's look at the performance summary for this. Again, I put this indicator together, or this strategy together, back in July of 2017. And so in July of 2017, and then I forgot about it. And you see, well, mainly a huge February. Actually, March and April were really nice too. And so this could be a strategy to trade in this type of market because it tends to capture these moves. Here is the equity curve. The average trade profit is low historically, but it's $64 this year on the NASDAQ. So if you look at the average trade profit annual in 2018, take this number, divide it by that number, it's about $64. And so you have a strategy that's calling reversals. So you're doing well in 2018 in the last 12 months since I developed this strategy. So sometimes you intuitively develop strategies for the market that's developing and you don't have enough back test maybe to run it on. And so it becomes an emerging strategy, and this is one that I wished I would have kept an eye on closer because it keeps track of these turning points. Another thing you could have done is use these stochastic divergence indicator. And so what happens is when the market makes a new low but the stochastics doesn't, then you get a divergence. And so that also happened here. So the market made a new low, the stochastics did not, the advanced decline line did not, and so that ended up being a good turning point on the day. And tick pulse is actually making a comeback. Here it is without slippage and commission. And we stopped trading it right here. It had gone through a worst case drawdown. It hit a $7,000 drawdown before that. We can only go back 6 months of data on this computer. I might be able to get more. I don't want to crash it right now. But we stopped trading it right here on November the 15th, and that was the low. And so that happens sometimes. But this is making a strong comeback. Tick pulses, and this is without slippage and commission. The average trade profit is $64.83 the last 6 months. And it's hard to trade a trend strategy unless you get a strategy like tick pulse that's fast. You need a strategy that is really fast. And today you saw it capture the short move, and then it captured a couple of the long moves. And so ideal day for this type of strategy doesn't happen every day. It has days where it loses on the long side and the short side, but today was a nice day for tick pulse. And so tick pulse, the stochastic divergence, the advanced decline line divergence, and this tick um, actually volume sum day dynamic trend strategy is what it's called, are some of the ways to trade this market. So let me know if you're interested in those, if you have any questions on those. And that is what I'm looking at. I'm continuing to look at better ways to trade reversals in the stock indexes. Our SR counter trends were flat today, been flat the last few days.